Okay, update on the broader markets here on April 29th, Friday night. We have our April closing candle and a closing candle for the week as well. And I'd say the general summary is the market is very weak. It's even weaker than I thought. I would have expected that we would have had our daily cycle bounce by now, which would have been a rally for 4, 5, maybe even 7 trading days. Instead, we had look at this, right? We had this green day, no follow through, rejection. This green day, no follow through, rejection. And so we're now on day 45 of the daily cycle. We had our top on day 23. And so I guess at this point, we're going for a left translated daily cycle, right? So a daily cycle that spends more time going down than it spends going up, which means once we get to day 46, we're now at just halfway, right? Like, so we spent 23 days going up, 23 days going down. So it seems like this is all leading up to an FOMC bottom. But that is not a bottom that I suspect will, resolve in something sustainable in terms of a rally. So if we look at the weekly chart, again, I keep pointing this out. We have a swing high on the weekly chart below 45.07 on SPX cash. We are now that swing high occurred on week 5. We are now in week 9. So the previous weekly cycle rallied for, or I should say the previous weekly cycle lasted 20 weeks, right? This part that I'm highlighting here. It rallied for 13 weeks. So we had our high on week 13, and then we declined into week 20. And then we had this kind of scary, almost made an undercut, but we rebounded, made a high for the cycle, which was essentially a double top here. And we've been declining ever since week 5. I mean, look at this. Like, this is a massive decline. Like, and remember that this is a weekly chart. So much more significant than the daily chart in terms of the trend. This tells you the trend is lower. We're going to get a bounce, no doubt. But unless that bounce hurdles us above 45.07, the trend is lower. And so if you're aggressive, you're looking to short, maybe we get ourselves back to like 43.78. I mean, even that is maybe a stretch at this point. Now, anything could happen, but the odds now favor lower. Again, also thinking about the fact that this is only week 9 and we've already undercut the previous weekly. Did we make a new low? Let's see. 41.14.65. No, we didn't. So we didn't quite make a new low yet. So we got to get to 41.14.65, which seems like very likely that that's going to happen next week, right? Like it's sort of a magnet at this point. But I mean, look at this. We're definitely going to get a bounce at some point because, again, markets, when they're downtrending, they make lower lows and then they make lower highs. They have to make those lower highs. Just like a market that's in an uptrend has to make the higher lows, right? So at some point, we're going to get a bounce, right? Something, you can kind of imagine maybe we go a little bit lower, then we go a little bit lower, then we get a bounce up to like something like there. Then we come down, then we go up, then we come down. You just kind of get, a little queasy. I mean, we'll see how bearish we're talking in terms of how many bearish cycles daily and weekly. But at this point, we're only on week 8, week 9. So next week starts week 10. And I'll point this out again. Look at this chart going back to, let's scroll back to 2015. You have a cycle here that's 17 weeks, 19, 18. That's about your shortest cycle. That doesn't mean we can't have some kind of freakish, really short cycle. That anything could happen. Price action is price action. But the odds suggest we're going to fall for another 8, 9, 10, maybe even 12 weeks. And again, it won't happen in a straight line. There will be bounces along the way because there will be a few daily cycles. So we're going to have daily cycle bounces, for instance. But with this kind of treacherous decline, it's important to look at the longer term picture and that is, the monthly chart. Remember, we've had this rocket launch out of the COVID low. So this is now month 22. So I should say we topped out on month 22 from this rocket launch on COVID. If you watched the video I posted about uranium, uranium has topped out so far on month 25, right? Because it made a new high on in April, whereas the S&P 500 topped out in January. So it topped out on month 22. I don't think that's a coincidence, right? Right? This is a topping pattern from this large rally, right? When you have a large rally like this, a large rally leg, again, markets in an uptrend make higher lows, right? This is potentially like this so far is just a higher low on this really long time frame. And so we're going to have to watch here because we're now, theoretically 23, 20 month 24. So you imagine we're going to get a yearly cycle low. So these are yearly cycles. So this was a yearly cycle that was 15 months. This was a really short, freakish yearly cycle, 10 months, 15 months, 9. So we're in a really long one right now. And this seems to be setting up for something potentially even more insidious because we could get a yearly cycle low and then an early high for the next yearly cycle, which would set us up for a much, much longer decline. So we'll have to watch. I mean, that's something to be on guard for in the same way that we're now having essentially two bearish weekly cycles in a row. And the cues I'll just switch to really quickly are just different count, but much more severe. So we've made fresh lows on day 33 of the daily cycle. So we're not even that deep in the daily cycle for the cues. On the weekly, same kind of picture. I mean, look at this waterfall decline. My goodness, gap down, hasn't been filled. This at some point was, looked very promising, was bright green. I mean, we're going to get a bounce soon. So week 6, but think about that. We're on week 6. Look at these previous cycles, 31 weeks, 22, 26, 24, 17. We have a long time to fall, folks. And so, again, if you're aggressive, you'll use those lower highs to short. At the very least, if you're caught long somehow, use those lower highs to sell, get out, because this is a decline that's going to continue. Same picture on the monthly, although I should say not the same picture. The Qs topped out in November, so they topped out on month 20 from this massive COVID run. And let's see, what was the, if you somehow caught that wick, that was a cool 142% return. So not as great as uranium. Like, if you caught CCJ that wick, you caught a 500% return. But this big trend leg is pulling back now. And so it's going to be a question, are we going to resolve, is this going to just resolve in a higher low and then we keep moving? Or are we settling into some kind of nasty, choppy trading range? Or is it something even more insidious where we're going significantly lower? And finally, IWM. And again, the cycles will tell you this, right? So IWM, we're on day 42, so of daily cycle, so very deep in the timing band. So similar to SPX in that way. Similar situation for SPX. In this case, even worse because we've actually already made a low. This is a failed weekly cycle because we've already went below this past weekly cycle, which was pretty long at 31 weeks. And again, same, not to sound like a broken record, we're still relatively early in the weekly cycle, so a long time to fall. And the Qs also have the dubious distinction of having a swing high on the monthly chart. I mean, my goodness. So I'll take the drawings off. This is a swing high. Once we went below this low here, so this candle, and these are yearly candles. So each candle is an entire year of price action. So this is the entire year of 2021. So once we went below that at 190.94, so we're now at 185 essentially, we have a swing high for the year. We're certainly going to bounce, we'll probably get through this level. Maybe we get to like 192, 193, but this is marking potentially a pretty big top. Now, at the same time, this candle looked pretty ominous, right? Like in real time, this was actually a bearish outside candle. We did come back and recover that. So who knows? But like this is not a good setup, especially this early in the year. Yet, it cuts both ways because this early in the year gives you a lot of time to rebound. But that's an important level to know about, right? That 190.94 being below that, incredibly bearish to have a swing high on this large a time frame. Not good.